Properties. Okay, well that should fix the audio input capture. The audio output capture should be fixed. If I do this, and no one can confirm all of this. Annoying. Nolan, do you hear my voice on the stream? Do you hear your own voice?
Yeah, I can hear a couple voices.
You can hear your voice and my voice?
Yeah, I can.
Nice. Perfect. Well,
I
sorry.
think I definitely can hear your voice.
Can you not hear your own?
I do not.
No.
I got it. I can hear the lag. The lag is like 20 seconds.
You can hear your own voice?
I can hear my voice.
Nice. Okay.
I hear
Perfect.
myself back like 30 seconds later.
Perfect. Perfect. All right. Well, sorry for the confusion for everyone who I was talking earlier. My mouth was moving and no words were coming out, but I introduced myself. We're going to be doing weekly, either on Saturday or Sunday. We're going to be doing weekly real estate assessments in the central Indiana area to start, and then probably branch out to other real estate upcoming markets. Um, a lot of places that interest me are like Texas, some towns in Ohio, some towns in North Carolina, like Charlotte, San Antonio. Um, it just kind of depends on whether or not I read an article or a report comes out. My attention is very whimsical because I really have no hope of ever investing there. So unless I read an article and there's a real drive or an influx of investors, I most likely won't ever look at it. But for the sake of content, I most likely will take a look if there's something really publishing it. But for Indiana content, I am looking to invest very soon. So I'll be doing weekly breakdowns of different properties using cost assumptions, so people can follow along on our journey into buying a multifamily home. This first property we're taking a look at is 5836 Roslyn Ave, Indianapolis, Indiana. It's been on the property for about 17 days, which, yeah, decently long time for property in Broad Ripple. Um, Pretty quick market. You can see uh, Nolan Nolan and I are the founders of well-rounded communities. We typically, the first thing we do when we look at properties is just kind of take a first glance and see if anything kind of fails the sniff test. And the first thing we saw were these dark spots on the wooden floors, which you can assume is water damage of some sort. Um, so And you can see they put in some of this tile in the kitchen. You know, you don't know how recent. Same thing in the bathroom. Looks like an okay job. You know, what do you think, Nolan? You see this tub? It's kind of tub job here. I mean, this is just like it's just the bathrooms just need to be done. What an odd place to put a window. Is that not odd to have a window right next to your bathroom, like into your bathroom? I don't think
Yeah, I would say they did not put very much thought into
I have
the
never seen
bathrooms.
I have never seen a window directly into your shower. That's awesome, honestly. So any peeping toms, please come by this address. Um, yeah, I'd get a curtain. I'd get a curtain for your shower. Maybe you just like to look outside when you shower. I don't know. Very, very odd. You know, you can kind of see like some of the wall. Like, look at this outlet. Why is there an outlet right here? What? Just kind of bizarre. You know, just like older, older, bizarre out. But like like the bedrooms, I have like no complaints. Nothing really to say. Do you, Nolan?
No, I have no problem with the bedrooms.
Yeah. So it looks like one of the bedrooms is hardwood and all the other ones are carpet. They have two separate basements. Washer and dryer in the basements. I like that. They're unfinished basements, but so are every single one here. So weird little like storage room. I don't. Realtors need to do a better job. What does this photo add? Like, what is this photo trying to show you? I guess I don't know. Transition between the rooms, but uh, kitchen. Okay. Oh, I kind of like this. It's an ideal place for a paper towel holder, honestly. Yeah, both the bathrooms are the same. Just kind of yucky. Um, yeah, that's the two bedroom, I would assume. This kind of looks like, dude. This kind of looked like a sauna for a second.
That's
Does
what I thought too.
does this? Yo, we should turn. We may turn one of these into a sauna for our tenant. Wow, big basement. Holy moly, tons of space. Like when you see a basement like this, I sometimes think it's like, man, why do you not top that off? I don't know. Too much time, too much money. Don't want critters crawling around. All right. Well, my first look is it's gonna take a little bit of money, but you could stuff someone in this property if need be. I personally wouldn't. I would put some money into the bathrooms first, but that is just a personal preference. So let's go ahead and put these side by side. So property taxes, annual amount 4312, 4419. So our formula is working pretty much spot on. Insurance 960, that's fine. Administrative 50. Maintenance and repairs. Well, first 299 900 improvements. We'd be working on improving 4 bathrooms and with some flooring damage. Um, let's let's go ahead and say let's stay conservative here and say we're gonna do 3,000 a bathroom. Um, or let's even go let's go 2 grand a bathroom, and we're doing full rehabs of these bathrooms. We're probably gonna have to put new tubs in and take the tile out. Uh, and we may have to address the flooring issue as well, but probably not replace. You can't replace that entire wood floor. Um, If anything, you may just section that off and try and just address that little section of flooring. Um, Kind of spot reduce the damage, make sure there's no like no mold buildup. And we had a recent family member who got that done, and uh, wood is not cheap, so we'll put in another 4 grand for that. So that'd come out to about 12 grand. So our total cash outlay would be um 29 grand at closing. This property, yeah, we'd use 3.5 down. This would be an FHA loan. 3.5 grand, 29 down, closing costs, 5.9%. The interest rate quote we got back was 5.2%. And you could see, what do I have in here for rents? Monthly rental assumptions. This isn't Broad Ripple. Right off the Mona, it doesn't tell us square footage here. It's kind of hard because it has a 3-bedroom, 2-bath, and a 2-bed, 1-bath. There's some garage space you have here. The rent is gonna make or break. It's gonna make or break this. We'll say one of the units can get the 3-bed 2-bath can it looked to be probably like 1,300 square feet or 1,100 square feet, something like that. So we'll assume 1,100 in rent, and we'll assume 1,000 for the 2-bed, and we'll call it 2,100. See, our total ROI, we'd be cash negative, but our total ROI would be positive. And this is where you can start to play with numbers where the actual investment strategy for this property would probably be to do a conventional loan. We probably wouldn't do FHA financing. We'd probably want to do a conventional 20% down. This would be an investment property. So you'd come in there. If we're lucky, we only have to put out 12 grand in cash to fix this property up. It's being very, generous. Um, we may be able to screw with the buying price a little bit. If I'm being hopeful, we can get them down to 275. 275 is probably the ideal price for us. And then I don't really think we can screw with rents anymore. I think this Broad Ripple area, we'd be it'd be pretty fair. It'd be pretty fair to say rents will be around that $1,100 to $1,000. Um, for consistency's sake, we may be able to bump rents up to $1,300 to $1,400 a month, but let's look at the neighborhood. Where we at? All right. Let's see if they have anything. Okay. Set up for sale. Let's go for rent. 2-bed, 1-bath, 1.6, 1.4, 1.4, 1.2. Are you fucking kidding me? What? Damn. All right, let's look at some of these rentals. House for rent. 1550. Utilities, off-street parking, and on-site laundry included. Okay. This quaint, I love that word. This quaint bungalow is right in the heart of city to everything Sobro has to offer. No smoking of any kind. That's a pretty nice house. It's the same thing here. It's the same story. Imagine yourself living in the 5387 Carroll Ave unit of this beautifully renovated duplex. This building has been redone top to bottom. All new appliances, energy efficient windows, additional insulation, kitchens with granite countertops, all updated bathrooms, just to name a few. All right, bro. Yeah, 1.4, 1.4. You can see how long has this been on the market? Does it say 20 days listed, 28 contacts? Damn, really? What does that mean? Does it mean 20 people have fucking reached out to them? All right, well, let me uh let me go ahead and tweak this a little bit. Yeah, Nolan, if you see the single family home, go ahead and just hit duplicate here and try and run your own cost comparison. Modify some of the numbers and we can hop into it afterwards. I'll pull it
Hit
up on stream.
duplicate on the stream.
No, no, no. Hit duplicate. Just hit duplicate here on the rental template and run your own analysis, and then we can
Hmm.
look. We can take a look after.
Yep.
Um, and I'll let you talk through it and run through it. Um, so after looking at some more comparables, I'm thinking that three bed may be closer to 1,300, and that two bed may be closer to 1,100. And you're getting a cash ROI that's pretty positive. Property taxes are damn near on the money. This formula, let's take the actuals. Let's get the actuals for property taxes in here. Um, just because we can. Come on, get me back to where I was. Zillow, dog, you don't have to be like that. There we go. All right. So let's get back to where we were. $310 pending sale. Yeah, look, this property was pending sale, and the sale fell through, and so they lowered the price. Yeah. Yep, happens frequently. All right. So we got an actual amount. 4312. Insurance $80 a month. Yeah, if our closing costs could be 5,000. There'll be some negotiating involved in this for sure. Eight programs. Here, Nolan, come follow this formula through. Where like if you add a miscellaneous repairs of let's say 2.5% of income, or you could even say like 3% of income miscellaneous repairs on this property, you you start to kind of get like the real picture of what's happening here. And L4 is vacancy rate of 5%. Okay, let's go ahead and do 1 divided by 12. Okay, sorry. Let me go ahead and
You
fix this.
had 3% on top of 3% of maintenance.
Yeah, let me go ahead and fix this while I remember. Yeah, for management, for variable management costs. So, we may pay someone to do something for us monthly, or we may, have to do something ourselves. Um, just so I just stacked it on top of us. Stacked it on top. Oops. Oh shit. So pay special formula only. And so I put in 1 month of vacancy, which is pretty generous. I'm just assuming, hey, every year we're only going to have 1 month of vacancy, meaning 1 month to turn this motherfucker over, and we're good basically the rest of the time. And not that that's an unfair assumption, but uh, it's reasonable when you're just underwriting a property to be around 8% rather than 5%. Um, you can see over the long. Where's this summing? Yeah, this is cash flow year one amortization. You can see kind of the trend. So let's say Nolan, we hold this property for 30 years. The the life of the property, it would end up being a phenomenal investment. Are you on my Discord stream or am I streaming on Discord?
No, you're not.
Oh, so you're just trying to follow my YouTube stream?
Mm-hmm.
It's lagging.
Yep.
All right, here. Follow my follow my Discord stream. All right. So there's a couple assumptions I'm making here. I'm assuming we can negotiate the purchase price down to like around 275. That's the hope. Um, and assuming we can't, the property still works around to like 290, 280. He already came down 10 grand. Um, I think 275 is around a fair price because we're gonna have to put in generously around 12k, and our total cost is gonna come out to about 290 or 300k anyways, with closing costs and everything. So you see our cash ROI. So on F40, it would start at about 4.6%, and our total ROI when you take in the equity accrued from the mortgage being paid down would be about 9%. And then slowly but surely at the end of the 30 years, our the return on our cash would be about 21%, and our return on our total ROI would be about 41%. So overall, pretty profitable. They assumed this property came with the assumption that they pay all utilities. Um, it's fairly reasonable in the Indianapolis market to assume that most places have all utilities in the tenant's name. Um, you know, you may even say miscellaneous repairs and variable managed could be 3.5 and 3.5. I mean, you know, it whatever whatever you know however this would work, and then let's say we can't even get him down from his price, right? We say 299,000. Is that the current price or is it 299,999? 299,900. Okay, 299,900. And let's assume we're a little bit off. Let's give ourselves a $5,000 penalty for missing the mark. we're still in the money. Um, we'd still be in the money with giving him the price he asked for, plus a $5,000 uh allotted, like, we don't know how to budget for bathrooms.
Yeah.
We may have to, get this flooring may be way more expensive than we think, but and you could see the trend is the same, where the spread is less, but at the end of year 30, it's still 16% and 35%. This is assuming very, very modest. This is assuming our average revenue growth, by the way, so you can understand how this model works. I'm assuming we do not increase our rent the first 3 years we're operating, but our expenses increase the first 3 years. Sorry, so the first year, I'm assuming our revenue and expenses don't increase. But then in years 2 and 3, I'm assuming our operating expenses increase by 2%. And then I'm assuming moving forward, they increase in tandem. So they increase step by step.
They just
Um,
follow each other.
yeah, they follow each other, which historically, um, if you don't know, revenue has substantially outgrown expenses, um, like exponentially.
That would
But
make sense.
my theory, though, this is my theory. The long term theory is rents follow inflation, and that is mathematically proven, that rents follow inflation. So at the very least, our revenue will follow whatever our expenses are. We'll have to, you know, the rents will follow whatever it costs us to provide for the mortgage, and then after, obviously, at year 30, once this mortgage is paid off, this return on investment goes from 35% to 100%. Not technically 100%, um, but it no longer would have this equity part, right? You would just have whatever your expenses. So right now, your expenses are about 30% of your gross income. And this is kind of the dance, Nolan, where I'm going to build into this model the the below the line items. So like here you'd have like depreciation, right? You would have depreciation is by far the biggest line item, where I say, and you hear real estate professionals all the time say, you don't pay tax. So technically, we would have $1,600 of cash flow on this property, right? Where
Mm-hmm.
at the end of this year, we would collect real money, $1,659. However, at the start of this year, we would have had we would have put in 17 grand. And let's say, we put in new appliances, whatever. Um, we end up putting in we end up putting in more money than we think we're going to put in, or the actual building itself has depreciation that we can claim. Unlikely, though, the building was in 1940, but we would do a cost segregation study when we buy the building, and um, that would be something that we would understand when purchasing it, what can be depreciated and what could not be depreciated. Let's say we're able to claim $1,700 in depreciation, right? Then the calculation is literally this. This is our gain on the property this year from the IRS's perspective. Although we literally get this in cash, right? We get we get 16 we get $1,659 in cash. Although we lost, quote unquote, lost $1,700 in depreciation because, the government says so, right? They say, well, your property's losing value. You're gonna have to repair the roof. You're gonna have to do that. And you know what we're doing up here? We're budgeting for that. but the IRS is also helping us by budgeting for that. And so technically, Nolan, the two of us would split this and we would get $20 tax write off. We would technically lose $20 each on this property that year. So,
Hmm.
so in technical terms, we would say this divide by 12. On this investment, we would have each made $138 a month, and we would claim, divide by 2. We would claim a $2 loss on our taxes per month. And that's how people get rich. Do this over 10,000 units and you can see how people get absurdly fucking rich, right?
I mean, yeah, you're just building more equity in the property,
Yeah,
writing off the depreciation.
cuz even if, and you can understand too, right? Like even if this number is like not that high, your cash flow, like your cash flow doesn't have to be that high. As long as you have high enough depreciation, you can sell the depreciation to someone who needs it. Remember that model I was talking to you about, that where you're able to sell losses to somebody who needs them,
Yep.
where ultimately we may pair with uh bigger fish, people people who are, family members or others, where we, if we have an LLC, just say, hey, can does anyone want to buy into our LLC for $100 and we'll allocate depreciation to you.
So our losses are basically just.
Yeah, they would buy into our property and we'll allocate them we'll allocate them losses. It can't be only $100. They have to have substantial capital. It can't be like, hey, give me $1 and I'll give you $10 million. It's not like an infinite money glitch in that sense. They have to be a legitimate investor. So, don't some people, anyone watching this being like, "Ooh, that's how people get rich." Like, no, it's not. It's not as simple because they have to actually buy your losses. So if you have, let's say, $10,000 in depreciable loss, like depreciation, or like $10,000 in like uh losses that you can't write off yourself because there's a capped amount of losses an individual can claim. They need they need to buy it for uh I can't remember the exact amount, but like they can't go through you directly. You'd have to sell it to a firm like CBRE, like a broker, and then they're able to deal with it without there has to be some disaffiliation. Otherwise, it can kind of get flagged by the IRS. But just little note there, little tidbit of information. Either way, for our purposes, Nolan, even if this number is zero, this number is also an important calculation. This number helps us, in my opinion. There's kind of two ways for us to look at this. This number helps us. We want this number to be high for the potential to do more deals. This number's good for our general wealth. But if this number is like close to zero, we can't really repeat this process unless, we're working real, just cashing our own checks because we're spending time, right?
Yeah, we need to
We
have
need
money
we need
from the property.
yes, the cash flow is necessary, passive income is necessary, dividends are necessary. Having money work for you is necessary basically to then be able to continuously pledge on new property. But in my opinion, even on a model like this where I'm I'm being very pessimistic. Like I'm assuming bad rents. I'm assuming I'm assuming like we're going in this with like high insurance. I'm assuming we're having management costs and administrative costs. So like we'd be paying ourselves to manage this.
Yeah.
Like and that's what we should do, right? A lot of people don't do that because they're like, oh no, I want to keep all the cash, but it's like, no, but
Already baked in that we need to spend a
no,
certain amount of time
yeah, no,
on the
but yeah,
property.
but you kind of want to be tax negative though. It's like you want these taxable losses, like, and you need to take care of your tenants. Like, we're not going to be absentee landlords. Like, you're, there are going to be problems. Like, if there are no problems, that's great, but there are going to be problems, and so you have to budget for them. And so, you know, we would have ultimately we would just accrue. We would have a giant balance sheet if not. At the end of the day, if this $600 never gets spent in administrative, that's awesome. This $600 would then just go in an escrow account. That would be my style of property management. If it was up to me, I would say every dollar we didn't spend of that, put it in a bank account that neither one of us could touch, and pledge it towards our future investments in real estate and towards future replacement reserves. You know,
Yep, wait
um,
for it to be used.
yeah, because the budgets and unless we have further data to prove like there'd be no purpose for it to be used, or obviously we like are really desperate for cash, or there's a great investment opportunity. Until there's further logic, it's like let's keep you know let's keep a little bit of cash under us. The only way these fucking people get really caught in real estate is because they're riding dirty. you know they're riding with no cash. They can't even go a single month without someone in their properties. But all right, I like this property. We'll check this one. Let's start a trend here. So if properties are in the money, we're gonna highlight them. Not this. Sorry. If properties are in the money, we're gonna highlight them green.
Lovely.
In the money. All right. So is this the one you're looking at, Nolan?
Mm-hmm.
All right. Can you send it to me on Zillow? Or did you already? Nice. Okay.
I sent it over Discord.
Discord. There we go.
Yeah, so I just saw this property is pretty close to us, on 116th in between downtown Carmel and downtown Fishers. Newly renovated on the inside completely.
Oh,
It
that's
really
a
stood out to me for the
dude.
price
This
and
is
kind of what
this
they're
is a
offering.
nice kitchen.
Dude, look at the bathrooms. I mean, they really outdid themselves.
I like that kitchen. Oh, nice bathroom. Damn, that bathtub. Yeah, whoever their subcontractor is, we need to get in touch.
Yeah, so apparently the owner mm, built out one of the bathrooms as well to make that master closet and also the master bedroom as well.
Wow. Wow, that
Yeah,
shower. What was the price? 329. It's a 3-bed, 2-bath. Okay. Fully updated. What the hell? It's been on Zillow for 121 days. Uh-oh. Something's wrong here. Why is it on Zillow for 121 days? Alright.
maybe someone died in the home.
We're going to a parcel search. This may have some property taxes that you have to pay, Nolan, with it. No parcel? What? Okay, well, I'll type in the address then. Okay, something super weird. Nolan, if you're watching my stream, there's no property tax parcel code for this. What? Okay.
Should that not happen?
You probably should be able to pull up property taxes for you. East 106th Street, Fishers, IN. Owner's name? What? All right, parcel number. Okay. Parcel search, Fishers, Indiana. No, okay, it doesn't have any screwed up taxes. Never mind. Okay, ownership information. Deeded owner, RWA Properties LLC. RWA Properties LLC. Realty Wealth Advisors owns this, it looks like. Okay, properties. So this was done professionally, Nolan. Look at my stream. Look at these goofy goobers.
Mm-hmm.
We are not your typical real estate firm. Our company was founded on many years of experience with investment properties, retail residential re, retail residential real estate, full service property management, and construction rehab experience. In short, we offer total real estate solutions for your home. Cool. Um, someone should offer you website help. All right. Property
Yeah, it's a
management.
little ugly.
Yeah.
That green color is disgusting.
Four bedrooms, one bathroom. Okay. Why is it not on here though? Is that not weird? The same property isn't on their website,
It's interesting.
even though they own it. Podcast. Ooh. What? The Homeboys. What the hell? Dude, I feel like I'm going down a rabbit hole now. You will find so many odd characters in real estate. The Homeboys podcast education.
Rich Dad, Poor Dad.
Yeah, everyone recommends Rich Dad Poor Dad by Robert Kiyosaki. Poor Dad has a PhD. I agree with him. Poor Dad is a dumbass. Wow. All right, well I'm interested. Let's go to LinkedIn. He went to Indiana University. He only graduated in 2001? This guy graduated college in 2001. Huh. You look. He only founded Realty Wealth Advisors in 2012. How old does he look to you?
Late 40s, early 50s.
All right.
Does look kind of old.
Well, these guys are the homeboys, I guess. Let's see. Are they still doing the podcast? Dude, they're giving out the cheat code?
You're listening.
Oh my god. That is so loud. All right. Sorry, here, let me just turn it down really quickly.
You're listening to the Homeboy
Oh,
Podcast, recorded in our Indiana office and with combined 40 years of experience.
they said Indiana office. All right. Okay, I'm so curious now. Realty
This is what we're doing.
Wealth Advisors. Okay, they're in Fisher. They have pretty good reviews. They did a great job on that home, man. Okay. I don't have directions because they're right off 116th in Allisonville. Wow. Right next to Psalms. Huh.
They're pretty close to that house we were looking at.
They got TikTok, Facebook. Dude, let me send some connections. Wow. So interesting. Well, sorry for going on that long tangent and like randomly going down a rabbit hole, but so no, political township, Delaware. Um, as you can see, all good LLCs are in Delaware. That's just where they're formed. It's really cheap, and Delaware is good luck finding a legal case there. So, property assessment, okay. So the most recent valuation as of 2022 was $175,000 property tax card. Not really much to go off of here. You know, obviously their taxable amount versus the actual market amount isn't super important. Um, Look at the improvements though. This is the number you have to focus on because this is what you'll be taxed on mostly. So they did add significant value to the home. What is it selling for? 329. What'd they buy it for? So they bought it for. Okay, so they sold it for 190. Boom. What was the turnaround on that? They turned it around in 8 months. They should do before and afters on this shit because I'm honestly impressed. I'd love to see the before and after on this. All right, well,
I'm very impressed.
yeah. Regardless, this is top. I mean, that's top of the line. What would you say for a market? Well, okay, let's put some in. Let's put some inputs in. 329. Okay. Yeah, I can't even argue with that price. That for Fishers. Fishers is a high neighborhood. I don't even know why they're dropping the price. I don't know this neighborhood too well specifically, but unless there is some structural problem you can't see or like neighborhoods around it. Oh wait. I mean, yeah, Fishers. The three bedrooms, 2 grand. 2 grand a month probably isn't far off what you're gonna get. How many square foot was it? Sorry, let me go back. 1300.
E52.
It's only 1,300 square feet. How much is the mortgage on this home? It's 1,900. You can keep it. You can keep it at $2,000 a month in rent, assuming you'd find a renter for this. Number one problem with homes like this to rent is you may not even ever find someone who's willing to rent a home like this. It's just so nice.
Mm-hmm.
You know, the only people who you'd find to rent a home are people who are like me and my roommate Nolan, who would, who'd have two other roommates. You know, three guys who all have careers, who want to live close to downtown. You know, they want to rent out a home. You know, have some parties. But then guess what? As a landlord or as someone who owns a property, you don't want to rent to those. You don't want to rent to Dumb and Dumber. You don't want to rent to guys like me. Although we're pretty respectful to properties, you never can really tell. It's really hard to read that on a personal level unless you like, you know, unless you do like interviews rather than just like background and credit checks. You can't really know whether or not they're going to respect your property, nor is it really your business, but I just have to take it. But we'll just kind of run this property. Improvements $0. I wouldn't put a dollar into this property. Um, Closing costs 2%. Reserves, yeah, $0. Um, I think in the template, I'll do reserves. Um, I'll just put a reserves of $3,000. I think that's a healthy amount. Um, we'll so go here. Monthly rent 2 grand. Property tax, we have the literal property tax amount, and it was actually like really low, $764. So, right, just to make sure that's not like grossly wrong. Yep, it is grossly wrong. So they pay in spring and fall. The property tax amount is 1,200. So what was it? 1276. Property tax is 1276. Insurance, admin, miscellaneous repairs. I'm dropping that down to 0 for right now. I want to make a model that's more sophisticated where you can kind of toggle in and out, but actually we'll keep it at 3%. I'll lower it down to 1.5, but it'd basically be nothing. Keep management repairs. And you can see this property is a demon. Again, this would be another commercial property, so you'd have to put 20% down on this. This property would be an absolute fucking demon if you're able to get a renter in this. I mean, no questions asked.
Yeah.
I mean, just a literal just a literal fucking monster. Question is, can you find someone to rent it out? I think a lot of people are moving in that area, so not crazy. You wouldn't be crazy. Oops. Wait, what happened? All right, let me go back. I screwed up the formula somehow. Expenses as a percent. Yeah, this property tax is really low, man. I think people are worried. I think the city of Fishers is going to come and get you on this fucking property tax number, honestly. I think this property tax number is a little bit low. If I'm going to be real with you, I think it's a little bit low. 1200. If someone buys this, my opinion, if you buy this property at 300K, look, their tax assessment is this number. The second you buy this property at 300K, you're getting your shit stomped in with taxes. Your tax bill is going to triple. So let's go ahead and get realistic here, I guess, and switch back the formula. 3,000. Still, you're getting so much equity in the home. I don't know. That's a beautiful find though. Gorgeous home. Let's go home. Let's go ahead and write down their info in the contractors. Let's start a contractors list. Information. Pretty impressive. Pretty impressive stuff. Oh my god, it's already been an hour. Yikes. Alright, let's do one more home. Let me go back to save searches. 550.
I would love to stay in chat, but I have to go to yoga at 3.
No worries, man. I'm just gonna do one more.
Alright, cool.
Yeah.
Goodbye, stream. Hope you enjoyed the property search.
Yeah, thanks for sticking around. That property was really nice. Super, super nice. Immediately, the pictures are pretty low quality on this one. Kitchens are a little bit older, but not horrible. Bathrooms are old. What neighborhood is this in? It's in Meridian Kessler. Let's go ahead and entertain it real quick. You're kidding me, bro. You are absolutely kidding me that year over year they just completely fuck somebody on the rents? All right, bro. Really sad shit to see. Oops. Aw, my dog's crying. Brownie, come here, baby. Yeah, there's tons of good markets. Or sorry, tons of good homes at the beginning of the year, not so much now. Just going through and clearing the register. All right, so the home price is $39.90. Probably should get something real quick. Let me add this here to the maybe one row above, one row above. You could do property type, duplex, bedrooms, bathrooms. Pretty important information to have, so 6, 4, Oh yeah, I forgot. You gotta do something like this. You just have to go white. Oops, not white. It's actually black. And then white. Hoorah, the model is fixed. Same thing. Oops. White and black. All right, this one will be a little bit easier, I think, because we have the rents. That's kind of the thing. That's kind of the biggest guess. It's also kind of speculation on where rents are going, but not really going super far into that. Not changing too much more, but they're claiming that right now they have rents through October and December, not really far, and that they are getting 1,300 and 1,400. Let's assume we are able to replicate that at both rates, and that is the rate at which these properties are performing. 5.2 is the interest rate I've been using today. 20% down is the rate of interest. So you have 2,700, it's 400,000 in a pretty in a pretty rough neighborhood. Decent enough house. You're immediately cash negative, assuming you have to do any repairs and variable management costs. Sure, the tax we can use actual taxes. It's the parcel number. $279, eh? Placement cost $230. Basement 21,000. Neighborhood static. I'd love to just spend a day in the life of an appraiser. Say this neighborhood is static. First Indiana Properties LLC, Temple Properties. January 02, 1900. Total assessed value 264. Electric, sewer, water, gas, level, paved. All right. I need to get the county parcel number. Shit. No. Alright, let's get the county parcel number. Okay, 8021. 8021. 523. Four 4727. Is this the correct number? It's not. You're behind. How dare they? Alright. 4727. 26. You are barely breaking even, brother. Alright, we'll go. Take off the administrative. We'll do nothing. Alright? We're not gonna go check the property for shit. We're saying $900 a year on repairs for a 6-bedroom. And you see the property. I already go red here. It gets the first red rating from me. Not a real exciting property, not a real exciting neighborhood. You have to put out a bunch of cash. If you could talk them down to 375, what's it looking like? This is why real estate's so frustrating. If they're willing to sell it cheaper, the property works. They are not willing to sell it cheaper. That's why cost of capital is a very important discussion to have, because whoever has the cheapest cost of capital, this property could work for them. You know, if I have access to very cheap sources of debt like 2%, 1%, property could work for me. If I have access to, you know, very cheap scale, you know, handyman or lawn care services, the property could work for me, but I don't, so it'd be tough. It'd be tough to pull off, but I appreciate everyone tuning in. That was about an hour and 20 minutes. Probably going to divide this up into a couple of properties. So I appreciate again everyone tuning in. 4 properties got done. 3 I was really excited about. This last one, kind of shaky. I'd say in this market, so the highest return today was 3845 Carroll. Let's take a second look at that property. 3845 Carroll. What? Alright, hold on. What was the sales price on that home? I think it was the very first property that I looked at. No. The property that I think this is the property that Nolan sent me. No? Huh. I guess I'll delete it. I'm delusioned. Properties I covered today were Rosaline, College, and then I covered the property that Nolan sent me. Yeah, so that was something from a long time ago. Not important, but I appreciate this. It'll also be uploaded to YouTube later, so bye bye.